Broad-based selling is what we're seeing today, but only just. We're down around 0.5%. No surprise there because we actually had a very strong day yesterday. We're up over 2%.
Absolutely. I think today is really just a bit of profit taking. Obviously, there is still some nervousness around what will transpire in the EU. I think the market is really sort of saying, let's just keep our hands tight for a little bit. But I think it's pretty much a situation of we can't afford for this EU rescue package for the banks not to go through. I think the alternative is too ghastly to contemplate. So I think certainly the surge that we saw in European and US markets yesterday was indicative of the fact that the market is believing that this will come through. Of course, the rhetoric yesterday was very strong, but the detail was a bit short, and I think that's what the market is waiting for.
Isn't it fascinating that we're starting to see stronger rhetoric coming out of the Eurozone, and especially because of what we saw coming through from Dexia, the Belgian Franco Bank, which has created quite a bit of ruction within the banking space?
Yes, I think it's interesting for me to notice that in the EU space, they are now coming out with very similar sort of rhetoric that we've been seeing coming out of the US. And it's almost a bit of an acknowledgement that maybe an additional liquidity and additional support is what this market needs. We must also bear in mind that this is probably almost a last resort. You know, when you have the rights issues supporting banks, or when you have government stepping in, there really is not much after that can go. So this really has to work, or else, I hope you have enough baked beans.
Well, where does that leave us here in South Africa? The markets have been very volatile, but we have actually been in a tight trading range of around 29 to around 31,000 since the beginning of the year.
Yes. We see three very strong supporting factors for our market in days and weeks to come. Obviously, the EU will be a supporting factor for us, assuming that it does transpire into a positive move. One of the main issues for us around that is that it leads to euro strength, dollar weakness, which has a couple of knock-ons. Obviously, the rand has some strength in that, but it also means that the risk on trade is back. So you find flows back into emerging markets, you find commodity prices rising in dollar terms, and certainly that would be positive, not just for South Africa overall, but certainly also for our equity market. The second important factor for us is what we're expecting to come out of the US reporting season, starting today with Alcoa's earnings. Over the last couple of days and weeks, the focus has been very much on the economic numbers coming out of the US. I think it is now time for us to just change the view a little bit towards the economic earnings, the financial earnings, and we do believe that they will be very good and very supportive. Market is expecting around 12% earnings for the non-bank earnings coming out of the US, and that will certainly be supportive of the S&P valuations where we've got it at the moment. The third factor that we see being very supportive is what's transpiring in China. You mentioned the government stepping in and supporting some of its banks. It was in particular the large construction bank that they are supporting, and we see them directing some of their net new inflows straight into their own market, but maybe even repatriating some of their current investments in US treasuries into their construction bank. Why is the construction bank an important factor? Well, it's the property market in China that has been the overheated market and where a lot of the concern has been coming from. A sovereign wealth fund is also a very strong and sticky supporter for the long term, and we believe that will be very supportive for the Chinese market.
Looking at some of the South African stocks, we had a few companies going ex-div yesterday, Sasol being one of them, trading now flat, slightly to the negative at 335 Rand, as you can see it here. Nerina, it's also going to go ex-div in the US tomorrow, if I'm not mistaken. Is that meant to be adding a little bit of support to the market?
Yes,
today?
I think it's an interesting thing that we find there, because it was ex-div yesterday in South Africa, but the ADRs in New York are still trading cum-div today. So we're still seeing them currently being very strong, and that might last throughout the session today, especially as the US starts trading later on today. So it might be an opportunity a bit later in the day to take some profits on that, because it will be going ex-div in the US, although it's already ex-div in South Africa. So nice little trading tip.
Okay, and then what about RMB holdings?
RMB and First Rand was a very interesting one yesterday, because they were definitely the converse to the trend. Very strong positive day, and they were the two big red ones on the market. There was some market speculation that related to the Zambian bank deal that they were doing that had gone sour. In actual fact, what transpired there was that they both gone ex-div, a special dividend, both around about 3 to 3.5%. So nothing sinister to read into that. It really was just an ex-dividend play, and essentially that was what the market performance yesterday
and actually
reflected.
bearing the brunt of the negativity in the banking space. RMB holding is actually down around 2%, and as you can see, First Rand basically flat. It was slightly to the negative. Where are you finding value right now, Nerina? Would you be allocating new money to this very difficult markets?
It's an interesting question because I think it depends very much on your time horizon. Short term, there's obviously still a lot of volatility at play, but I think if you're starting to look slightly longer and medium term and maybe leading in towards the end of the year and for the fourth quarter, we're quite positive at this stage, and I do believe that there's more upside potential and more opportunity for good news. We've had strong pullbacks. The third quarter was particularly bad all around the world, around 20% down in many markets. It does provide a much lower base from which to go, and I would be putting money into the stock market at the moment.
Well, would you be putting it into an overall indice? Would you be focusing on the defensive stocks, because we know that those haven't really been hard hit? And then you look at the resource space, which is actually offering fantastic value, and you see PEs of well below 10 for the likes of Anglo American and BHP Billiton. Does that make that space attractive for you?
I would not be stock picking in a market like this because of the uncertainty and the volatility. So I would much rather prefer a broad-based, diversified exposure. I'd have my exposure to the equity market, but I'd do it on a very broad-based basis. So yes, obviously an index type play,
so more
that
of a
you don't
passive
have
play
to
as
stop
opposed
it.
to an active
Definitely
play.
a passive play, but I guess I'm talking my book when I say that.